Okay, we are starting. Hi everyone. Glad to see that people are joining. Today I wanted to share the research on hardware wallets ecosystem that I did, and glad that you are joining and listening to our events on weekly basis. Glad to see you, Taras, Gloria, writing GMs in the chat. Keep doing it. And wanted to remind you, if you have any questions during the event that I will have, feel free to write them in the chat, and I will be more than happy to answer. So before we start, I will tell a few words about 3x Capital and what we are doing for someone who is joining us for the first time. We are digital asset investment and advisory firm. We are focused on Web3 startups, and essentially we do three things. We support founders with backing with funds. Also, we support them with education, helping them to understand how VC market is structured and how to actually fundraise, get money, and achieve the mission that they set for themselves. And the third one will be advising, because we do provide advisory services in some cases for projects when they need the support with tokenomics development or setting up the fundraising processes. We are here for startups. And also a few words about myself. I'll be your speaker today, and I'm a senior investment analyst at 3x Capital. I'm mainly responsible for managing deal flow, which is quite big for us. We do have more than 150 startups coming into our pipeline each month, and we're trying to identify the best one from these startups and actually work with them directly. I joined the industry in 2019, starting from investing in various coins, obviously starting from Bitcoin, but also my purpose was to understand the market better, understand how everything is structured, and put my hands on various protocols and try to test them. And since then, I created a numerous of crypto wallets, tested a lot of different protocols, and actually saw the industry from different sides, from the sides where it's not as mature as some other industries, and you can see that there are lots of risks where you can lose your assets and there will be no way to actually get them back. But for me, it was a fascinating journey. I learned a lot and keep learning every day. That's why I decided to move from my previous experience, previous position working as a data analyst for a government, to switch into I can say more fast growing and revolutionary industry called crypto or Web3. And right now I'm focused full time on it and working with talented guys and girls from 3x Capital. So would be glad to share a few insights from my report with you today. And I will be checking a few times into our chat to see if there are any questions that you might ask from me. Yeah, starting from the, I can say, basics to understand why actually hardware wallets need to be introduced to broad audience, because the security in crypto is very important. From this chart, you can see that during the all time of existing of crypto industry, more than $7 billion was stolen through different hacks, through different phishing scams, and various interactions with users. And this number is actually growing. And if you will compare the 2021 and 2022, and then the beginning of 2023, you can see that the number of hacks is growing, the value that is stolen is growing as well. And while the crypto industry is becoming more mature, we still need to see a better security for users, so they can be sure that their assets won't be stolen. And if you're following the market closely, you can recall that hacks are happening usually each month, sometimes even each week. For example, right now I can recall that recently I remember the Mark Cuban wallet was hacked, the angel investor from United States. It was quite recently, and um, if you are following the Twitter of Vitalik Buterin, the founder of Ethereum, his Twitter was also hacked recently through the swapping his SIM card, and then on his Twitter there were published a phishing scam link, and a lot of funds of Vitalik followers were actually stolen through this activity. And even a few days ago, a platform called Galaxy, which is the crypto engagement platform where various projects are using it to engage with the community. It was actually also hacked, and platform users have lost a part of their assets as well. So, what we can do, how we can actually prevent these hacks, we will try to look through it today in this presentation. But then, before we will look into more practical side, I would like to review some trends with you. And I do like look into Google Trends, because for me it's a big platform, and knowing what people are searching in Google is helping a lot to understand what might be trending right now. So I tried to search the term decentralized exchange. I was trying to search self-custody, hot wallets, but decentralized exchange actually represents the trend that is happening right now. So you can see that during the bull market and good performance of crypto assets, we see that the term, like the quantity of Google searches on decentralized exchange, were growing. And this chart represents metrics from 0 to 100. And on 100, it is like the highest peak of Google searches for this particular term. And then what is lower is representing the decrease in this activity. So, for example, we saw that on October 2021, we saw the peak in decentralized exchange Google search, and then the trend was going down together with the start of a bear market and with less and less people talking about crypto. But then something else happened in 2022, in fall 2022. You remember the crash of FTX, big exchange, and a lot of people were harmed by this crash. And from the other side, this crash was quite profitable for hardware wallet providers, because they marked 100% of growth in sales of their products. And here on this chart, we can see that the trend of decentralized exchange on Google was growing as well, right? We see that immediately after we saw the crash of FTX, the decentralized exchange term was trending on Google Trends. And right now, you can see that even with the prolonged bear market and less people are interested in crypto, less and less new people are entering the market, still the Google trend on decentralized exchange is staying higher than it was before the start of 2021 bull market, and before the actually crash of FTX. So right now the numbers are higher, which allows us to understand that decentralization, self-custody, and caring about how your assets are stored is more trending than it was before. And the next metric, which allows us to actually confirm it, is decentralized exchange to centralized exchange spot trade volume. It is provided by the Glock together with the graph in CoinGecko, you can see that right now it's on all-time high, meaning that 26% of spot trade volume is happening on decentralized exchanges. And less people right now are trusting centralized entities and trying to move and mitigate risk of being locked inside the centralized custody. Cool. Let me check if you might have any questions here. Yes, you guys, I'm happy that you're enjoying what I'm talking here about, and I'm really glad for your active interaction. Feel free to add comments, your thoughts, questions. I will go through everything. I will make some pauses in my presentation, and we'll be covering it. But right now, let's move on. Yep. Then what we have is, you might remember that our general partner, Dima, was giving a lecture on security and safety tips for crypto users. I wanted to recall it today and show you that the part of this security is actually using a hardware wallet which is not connected to the internet. So you can see that tips are that you need to use your to make your password strong, unique, and not like connected to any date of birth or anything, because it should be unique and hard to guess for hackers. What you need to do as well, you need to be aware of suspicious interactions. And for users, like for experienced users, for me, for example, I understand that the risk of interaction with a suspicious smart contract or suspicious protocol is less than for newcomers into the market. But what we need to do, like all together, is to educate newcomers on how to learn about crypto scams, how to understand what protocols can be used, and how to actually make a simple analysis before interacting with a protocol. Two-factor authentication is a great one, and I see that more and more wallets are starting supporting this feature, because it is quite common stuff for utility outside the crypto, and some centralized entities like centralized exchanges. The two-factor authentication is great, but it also possesses a risk of losing keys for your two-factor authentication. So what is recommended here is to actually back up your keys for two-factor after you created it. Then something that is called multi-signature or multi-sig wallets. This is a great initiative, but still it's not supported broadly with various protocols. Right now, there are a few multi-sig wallets that you can use to store crypto, but it will be more harder to actually interact with protocols if you are a quite frequent user of crypto, right? And the last one, but not least, obviously, is using hardware wallets. And the main benefit is that by storing crypto on hardware wallets, you're actually taking it out from the internet, right? Taking it out from the opportunity for hackers to be able to connect and steal your wallet. And the risk remains only during the time when you are using your wallet and interacting with protocols. But still, there are new innovations and new wallets that are helping to mitigate this risk as well. So I recommend you to look through this article created by Dima. It's quite useful, and I can say that I'm using many of these tips to be able to store my assets securely, and recommend you to do it as well. Yeah, then there is a comparison of hot and cold wallets. So with hot wallets, we understand it as a software wallets which are connected to the internet, and these wallets are considered as a self-custody because you as a user are responsible for storing your keys for the wallet and interacting with various protocols. And cold wallets actually it's hardware wallets or paper wallets which are not connected to the internet. And to compare the size and adoption of hardware wallets, we can see that global crypto wallet market size is estimated at 8.4 billion, like the size dollars in 2022, and it is growing, expected to grow at compound annual growth rate of 24.8 from 2023 to 2030. In comparison, cold wallets are representing roughly 5% of the market share, but they are growing at much higher pace. So in certain point of time, we can see that this percentage will be increasing, and we will see more and more hardware wallets that are actually that people are moving from hot wallets to cold wallets. And here is some simple pros and cons of hardware wallets, starting obviously with enhanced security. So by using hardware, you are more secure and there are less risks for hacks, especially if you are not a frequent crypto user or you're just storing your assets safely in a hardware wallet. Then the second one is long-term storage, because it's pretty hard to actually destroy a hardware wallet. For example, if you are using a paper wallet, which is actually a piece of paper where you can write down your private key, right, and use it only when you need it connecting to the internet. But what is risky with this wallet is that paper is actually more and more easier to destroy and to actually lose than using a hardware wallet. And the third one is ownership and control. It's more like an advantage over non-custodial, over custodial wallets, like storing crypto in exchanges, because you know the phrase, not your keys, not your crypto, right? But when you're storing in your wallet, you are solely responsible for having access to these assets. But obviously, there are cons or negative sides of using hardware wallets. And the first one is inconvenience, because right now is not enough integration with various protocols and other hot wallets, because if you are actually using crypto on daily basis and you are interacting with a lot of different dApps, it's not easy for you to use hardware wallet, because it actually is not supported by a lot of protocols. So it creates you additional steps that you need to do to be able to interact. Then the second one is initial cost, right? Because hardware wallets are expensive. You need to pay for having it. In comparison, hot wallets are free. You are getting them for free, but here you're paying for enhanced security. And the third one, user experience. It's not for everyone, especially not for people who are only joining the market, joining the Web3. For them, it might be quite hard to understand how to use a hardware wallet and how to interact with it. But still, people who are joining, trying to go through exchanges, then through hot wallets, quite usually they are ending with having a hardware wallet because they have the initial experience after working with crypto for some time, and then they're deciding to increase their security and move to the hardware wallet. And in my opinion, this huge difference between market share of hot and cold wallets is also dependent on the fact that there are a lot of people who are having more than one hot wallet, because it's easily to create. It is free, right? And you can create numerous of wallets for various purposes. But if you're talking about cold wallets, actually one person needs one wallet to store all assets inside it. So that's why there might be a huge difference in market size between these two wallet types. Right, let me get back to you and take a look. Yeah, I see a lot of messages. I'm glad that you are actively participating. Awesome. I will continue with the market size overview that we have right now, and it was created by Modern Intelligence, a big research platform which creates research for different industries and different topics. So in 2023, the market size for hardware wallets was roughly 380 millions. And you remember that hot wallets were growing at around 25% CAGR, and hardware wallets are actually growing faster and are projected to grow faster at around 32% CAGR. And in 2028, we are expected to see this market growing to 1.5 billion in market size. And here are like the snippets of metrics for the market. So you can see that the fastest growing market right now is Asia, but the biggest one is Europe. And we will take a look at the market concentration and actually the almost monopoly on the market, and we'll try to understand how it can change in the future, right? Because right now, what we have is a few big wallets creators. The first one is Ledger. It is the biggest one, and I took metrics on revenue, unit price, and tried to find a projected company valuation. So for Ledger, it was estimated that their revenue in 2022 was at around 55.8 million. Their average unit price, which is the average between the cheapest one and the most expensive, is $114, and expectedly they are valued at $1.43 billion. Then we have Satoshi Labs, which is the closest competitor, and they are the creators of Trezor wallet, which is also a well-known hardware wallet. They had 21.2 million estimated revenue in 2022, which is more than 2 times smaller than for Ledger, and their average unit price is $144. I wasn't able to find information on valuation, but we can expect it roughly 2 times smaller than the valuation of Ledger based on revenue projections. And the third one is quite different. This wallet was actually supported by Binance, and Binance took part in creating it and in launching strategy. Right now, they have 8.4 million estimated revenue in 2022. They are way cheaper than the competitors, and they are focused on communities who are actually experimenting with moving from hot wallets to cold wallets and trying their first hardware wallets. That's why the unit price is quite cheap, and the target audience as well is quite different, right? And here is the case that the SafePol as a company has their token launched, and it was launched with the help of Binance. It was launched through their launch pool back in 2021, And right now, the token fully diluted valuation is standing at 281 million. So you can see that projects are picking different ways of going into market. Some are attracting funds through equity, right, through fundraising through equity, but some of them are ready to launch tokens, to make token sales in the past, and actually attract investors who are open to buying tokens from the market. And more about the concentration, you can see that Modern Intelligence did the research on how the market is concentrated, where the top of this column is red, and it means that the market is very consolidated, dominated by 1 to 5 major players. And then the green at the bottom of the column is fragmented, and it is highly competitive market without dominant players. So for hardware wallets, the case is that the market is quite concentrated, and we are due to see new players with innovations in storing, in recovering, or any other innovations that will be able to disrupt the market. And actually, before we will talk about innovations, let me also get back to you one more time. Yeah, I see Alejandro is asking, where can I find Ledger financials? It's quite hard to find it because it is a private company, right? It's not obligated to publicly share their financial information. So what we can do is to use different research tools that are doing assumptions and doing this estimated revenue that I found for various companies. In my case, I was using a research tool that allows to estimate the revenue for the last several years, and for numbers like average unit price and other metrics, I try to search through their shops to understand how the average price can be calculated. So answering your question, it's really hard to find this information publicly, but there are some research tools that allows you to estimate and project the revenue of the company, which is not the case with a SafePal, right? For them, you can look at their token, look at the volume, like the trading volume of the token, look at the number of holders, and be able to make an on-chain analysis of investors who are buying SafePal token. That's the power of blockchain, right? Yeah, let me continue. I do indicated a few innovations in security that are expected from hardware wallets, and part of these innovations are already implementing, right? As you know, storing keys in hardware wallets allows you to sign transaction offline, right? You're storing your crypto in a hardware wallet, and when you want to sign a transaction, do a send transaction, or interact with a protocol which is supported by the wallet, you need to connect your wallet somehow to the mobile phone or computer which we'll be using to make the interaction. And right now there are 3 ways of connecting and interacting with Cold Wallet. The first one, and the oldest one and the most common one right now, is plugging it directly to the computer, like a USB drive, and it is used to sign a transaction on the wallet. The risk is that during the connection to a computer, there is a probability that your wallet can be hacked, right? The very small probability, because the level of security of hardware wallets is high, all of information is encrypted, but still there is a risk. And the second way of connection is wireless Bluetooth connection, and some of wallet providers are using it. I know that Trezor introduced a wallet that is able to connect through the Bluetooth, but Bluetooth connection is also not 100% safe one, right? Because it also can be hacked, it can be corrupted, and potentially you can lose your assets through the Bluetooth connection. And the third one, which seems to be the most secure, but not as much adopted as the first one, the second one, is the QR code interaction. Because with QR code, everything is happening offline on the wallet, and then the information is transferred through the QR code. And right now, what is limiting this interaction is that a lot of protocols are not supporting QR codes, and the user experience with wallets built on QR code right now is not as developed, it's not as broad as the user experience with of wallets that are plugged directly to the device. So what can be added in the near future, and what we as users and investors obviously are expecting from hardware wallet manufacturers is the first one is sharded recovery. So you might heard about shards as a scaling method for different blockchain networks, but the concept behind it is that you can take one thing, divide it into several parts, and be able to store it with different parties. So how it works for hardware wallets, for example, you have your private key that you wanted to store and have ability to recover it in case the device will be lost, or in case the something will happen, right? So you will be able to do it through sharded recovery, and your private key will be split and encrypted into different parts. And these parts can be stored with your other devices or with trusted third parties that are trusted by a user. I know that a lot of wallet providers are working on it. I heard that Ledger back in May introduced Ledger recovery, and it wasn't very like a positive sign for Ledger community. They were not very happy with it, because the thing was that a few years ago there was a data leak from Ledger users, and part of sensitive personal data of Ledger users were actually leaked. It was emails, private data, data from KYC. And what Ledger introduced right now, that to be able to use their Ledger recovery, users need to pass KYC and provide Ledger with additional personal data. So what we are up to see from other providers is actually implementing and integrating sharded recovery, but remaining in the spirit of Web3 and decentralization, right? Without actually showing your personal data, without KYC. The solution for it may be zero knowledge proofs, where you will be able to prove your identity without actually revealing it, but still it's right now more in its infancy, and we are due to see some innovations in this direction. And the last stuff that I wanted to share with you is new industry players. But let me check what we have in the chat. Yeah, I see that Ivan is writing that he preferred to use Ledger. Yes, Ledger is the most popular one, and a lot of investors or users are satisfied with it. But they will be satisfied until they will try something much, much better, and will be ready to go from the obsolete solution to something new and innovative. And new industry player that actually we noticed, and they are growing quite fast. They are called Engrave, and they built a zero hardware wallet. And actually, like, the background is that hardware wallet security and various IT products can be assessed by evaluation assurance level, which is the grade, or like a grading system for product uh, assigned following on the completion of various criteria, meaning that there is an assessment where various criteria are assessed, and by finishing this assessment, the device can be having the uh, evaluation assurance level starting from 1 to 7. And actually, the only one cold wallet with EAL7 level of security is this zero wallet built by Engrave and actually supported by Binance. Binance is leading the round with this wallet, and looks like that will be the next play by Binance, uh, using their uh, using their expertise and using their opportunity to build good wallets and actually launch a token in the future through the model that was worked back in the past and was actually realized back in 2021 with SafePal. So we are looking closely to new industry players, especially to Engrave. And actually, I did a mistake. The name is Engrave, and we are well connected with them. We are communicating and actually looking into the ways how we can work together and support them during their fundraising round. If you would like to know more details about Engrave, feel free to contact us. We'll be glad to tell you more about it and why I'm so excited about what they are doing right now. And that's it that I wanted to share with you today. It was a pleasure to talk to you, and looking forward to receive some questions if you have them. If not, I encourage you to look through our socials and website. You might find a product and direction where you will be excited about, and we'll be happy to communicate with you personally about your endeavors. Yep. Thanks everyone for joining. I see no more questions we have, so I'll be wrapping up here. It was great to talk to you, everyone, and have a nice rest of the day, and looking forward to see you on our weekly meetings next week. Thank you, everyone. Goodbye.